Aussie yen.
Okay, Todd, thanks for that. Let's move on here. The pain at the pump is already playing a large role in the upcoming U.S. election. High energy costs just one of the many factors suppressing jobs growth, and just one of many issues our next guest would have to deal with if he were to make it to the White House. Republican hopeful Ron Paul joins us on the phone in an exclusive interview. And of course, Mr. Paul, welcome to Money in Motion.
Well, thank you, Melissa. It's great to have your show on. Currencies, of course, are vital. We talk about supply and demand of oil. Supply and demand of currency is so important, so your show is awfully important to a lot of people.
I want to start off, Congressman Paul, with your reaction to the jobs report this morning. I'm guessing that you think it's dismal and that there's a lot of work to be done.
Well, it certainly should be expected, because I don't think we've really been back into economic growth at all. So there are some blips upward, but long term, I think our economy has not been healthy for probably more like 12 years. Good growth in jobs and standard of living has not been going up at all. So, you know, the purchasing power of money goes down and people's standard of living goes down. The middle class is smaller than ever, and the cost of living, I think, is going up much faster than the government officials will admit.
Hi, sir. It's Brian Kelly. I'm curious about the switch, or at least the transition to a gold standard, which I know you're behind. To me, that would be a massive deflationary event, which, in light of austerity, the fiscal cliff, and a weak economy, would most likely plunge the U.S. into a depression. Is that your view on it?
No, but I know why you get that idea is because that's exactly what the British did in the 1920s, and that would be like us going back to the gold standard at $35 an ounce. Yes, it would be massively deflationary, but no, if you let the market set the ratio between the dollar and the gold, it is not deflationary. But I'm not looking for sudden changes like that. My big goal is just to legalize competition and allow the market to work and and to make these adjustments. When we had the resumption after the Civil War, it was a 3-year period to figure out what the ratio would be, and they went back and it was a totally non-event. But it's the way you do it. What I want to do is legalize gold and silver as it is in the Constitution, take off taxes off gold and silver, and allow that to work, and let people decide whether gold is good money or they want to keep investing and putting away Treasury bills for 10 years and think that's going to pay for a college education. I'd let them do it, but that's foolhardy. People would go to sound money if they had the chance.
Well, Congressman, it's Andy Bush here. I just want to say, I want to ask you about the central banks that are around the world. The Bank of Japan, the Federal Reserve, the Bank of England, and the ECB are all engaged in quantitative easing. Just curious what your thought is. How will this end?
Badly. It's going to end with the destruction of the value of the currency. We're in the midst of this. It certainly encouraged all the debt formation. We believe debt is an asset, and that is if the Congress spends more money and the Federal Reserve creates credit out of thin air and buys debt, that can be the asset behind our money. It makes no sense at all. So the more the Congress spend, the more money there is, and it has to devalue the currency. So the markets always want to correct that, and they want to deflate that, get rid of the debt, and get rid of the malinvestment. Of course, the politicians and the bankers are fighting this, and they say you have to inflate because deflation is so bad. But the inflationists will work. They have the printing presses, and they will create it, and eventually the confidence will be lost. And today, I think we're already seeing the early signs, because people who are on fixed incomes, their standard of living is going down, and we can't deny it.
So, Mr. Paul, this is a currency show. So with all that said, what is your outlook for the U.S. dollar?
Well, I think the dollar is going down in value, as it has been, precipitously since 1971, and that will continue. But when you ask what is the outlook for the dollar compared to what? Compared to prices, it's going to lose value. Compared to the euro, who knows, it might increase. So you can't compare it to other currencies just because other currencies might be in worse shape than we are. And there's a subjective part of this, too. The subjective theory of value tells you a little bit that you don't know how to predict when and what will happen, but we do know economic law says that if you create endlessly credit out of thin air, the value of that currency will go down. We know that will happen, and it will continue. As long as they continue to do that, there will be a malinvestment, excessive debt, that will end badly with a collapse of the currency.
Representative Paul, thanks a lot for your time. We appreciate it. Ron Paul, Republican presidential candidate. Okay, so let's talk about the dollar here, and he makes a very good point. He has watched the show, obviously, as an educated man.
Exactly.
He asks against what currency?
Yeah, that was a great point, wasn't it? Because that's true. I mean, and then I ran off of the 4 banks that are engaged in quantitative easing. So it really depends on where you go. If you want to sell the dollar because you don't like what the Federal Reserve's doing, you got to be careful against what you do it, because if you do it against another country that's quantitative easing, like Japan, you're going to run into some problems, or the Bank of England, or the ECB. So try to pick something. If that's your theme, pick a currency that's not engaged in that behavior.
Sorry, go ahead. Oh, I think there's another interesting point here, because we hear a lot of politicians from both sides of the aisle talking about we have to have a sound, strong currency. And I understand they're coming at it from a credibility of the country point of view. But at the same time, keep in mind, since the dollar started floating in 1972, it's had an inverse relationship with GDP. When our economy does better, the dollar falls, and vice versa. And that's because we spend more and the trade deficit widens, and we are having a better quality of life when the dollar's falling. And also, the dollar is only about 5% above its all-time low today. Some people might say that's a crisis. I don't feel like we're in a dollar crisis.
Yeah, and the dollar has that unique characteristic that it's a reserve currency. So you always need to have dollars out there, and the market does set the rate against gold right now. I mean, you buy gold in dollars. It's already done.
Right.
So.
Okay, got a question out there, send us an email. The address is moneyinmotion@cnbc.com. And if you want to learn more about currencies, go to Currency Class. It's our web-only tutorials that break down the basics of currency trading. They are fun to watch, so check them out. The address is moneyinmotion.cnbc.com.